Good. Okay. Good morning, good day, good evening, depending on the time you're catching this broadcast. It's your boy Pedro again. Wish you a happy Sunday wherever you are. Um, it's been a while, right? Yeah. Just here once again to give you um like kind of a weekend review or a week review about what has happened in the crypto market across the week, um, this past week. Week's about to close today, 1 12 midnight UTC. That's about 8 hours or like 8 hours away from closing the week and today as well. So just to give you a quick rundown as to what has transpired in the market this week. Um, well, once again, the previous week was more like a defense around a defense of sellers of the 42K region, and that was successful by the sellers, and markets went down to the 30K region. So the entirety of last week was more like it was now the turn of the buyers to defend the 30K region. So the question now beckons: as are the bulls in trouble? Like, is this sort of a decisive week for them? Yeah, I think going into this weekend, is today closes. The close of today also coincides with the close of the week, and then in a couple of days' time we'll be closing the month. So it's some sort of a decisive week for the markets, in my opinion, because how the market closes on a daily, weekly, and monthly basis will really you know s- give us an idea on how it would play going into the next phase of the year. You know, this is also not just close of the month, but the close of the second quarter of the year. So there's a whole lot in play this very week. So, well, yes, like I've always said in my previous videos, especially my last broadcasts, you know, when prices approach resistance areas, which I refer to as ceilings, key resistance areas, not just any resistance area, but mostly key resistance area, which in this case is the 42K region. Um, it's the key resistance area for this range we've been experiencing for over a month now since the May 19th crash. The tendency for the general marketplace, the majority of the market, is for people to get excited and then start projecting price targets. I've heard a whole lot of projections. The moment we see prices get to this level, 70K, 100K, 120, 200K, and so on and so forth, which is very normal, which is very, very normal. And only for them to all get disappointed and then prices reverse to the downside. And once prices get to the downside, which is the supports end, which I refer to as the floor, the tendency is for the opposite to happen, which means people tend to panic and then they start to call all sorts of downside targets. I've heard a whole lot of downside target as well. I've heard 15K, 17, 24, 9K, whole lot, so on and so forth. So it's been crazy, but I've always said it in my previous videos and I'll say it again. We are in a range. We are in a range. That means prices are still within these two areas. And I've always referred to them as, I'm not here to give you upside targets, give you projections. That is not, I'm not, it is not in my place to say as to where, to give, as to where the market will go next, as in what exact price market is going to hit in the next couple of days. That is not for me to say, but I'm just here, like most experts are doing, calling all sort of targets when prices approach these two levels: upside target for the resistance levels and downside targets for the downside, for the support level. I'm not here to do that. I've never done that in my previous posts. I've just been working strictly with what the market is currently doing, live, raw price action. As I'm speaking to you now, this is a live chart in real time. Price, the closing price as we speak is 33,270 dollars. So as you can see, it's already moving. It's moving. It's fluctuating. To tell you, I'm working with a live chart. And that's always been the case for all my broadcasts. So this, you can see that we are still ranging. Don't get carried away by what the general marketplace is thinking. The panic and the excitement. Panic at the bottom and the excitement at the top. So far this week was the turn of prices got rejected at the top and were headed towards the downside, the support side, which is the 30K region. And then they went, it was a crazy week because the 30K region, the 30K level, let's say level now, for the first time since the mid 19th was actually broken. But there's a difference between a level or a region broken or tested and close, close below or above. It was tested for the first time. That region has been tested, but that level itself hasn't been tested since the mid 19th crash. But that happened for the first time, and that's created a whole lot of more force than had ever been in the marketplace within this 1 month plus of consolidation that we've been in. So if you've been hearing downside target previously from the previous tests of 31K on May 8th and June 8th, 31K, May 23rd of 31,111K, you know, if you've heard a whole lot of panic and force in the markets and downside targets, it was even more. We saw more of that on Tuesday, it was June 22nd, because for the first time, it seemed like, yeah, we're going to actually, that region was actually going to be compromised. And then the question now beckons: is it over? Is the bull run? I mean, is it completely over for the Bitcoin market, as in terms of going upward? The answer for me is straightforward. So long as these two levels, or for so long as the 30K level is still intact, the consolidation is still intact. The 30 to 42K region consolidation is still intact, because this region was tested but not breached. A complete breach would entail a close below the region. So, like I've always been saying before, it's actually a region for me. It's more of a region for me than a level, because you can't just call it a level, because the prices, you don't expect prices to always repeat itself exactly. You don't expect 100% accuracy in the price, in the behavior, and the behavior of prices, or price action rather. That means prices will get to that stage. It doesn't. Okay, for instance, we've had 30K. We had 30K on May 19th. Then the region was tested again a couple of days later on May 23rd, the 31,111, and then a couple of weeks later on June 8th, it was 31K exactly. So you can see prices have been testing that region, but not exactly. The lows weren't exactly 30K. So you don't expect it to be perfect. It's not gonna be perfect. That is why it's gonna be testing that region, so that it's gonna create an area, a region. So it's not just gonna be it's not just gonna be a level, a unitary level, but a region. So why looking to the left hand side, you're gonna see that this region has been tested before in the past. I made mention of this in my market updates on 15th of this month, a couple of weeks ago. This region was tested about 8 times, almost 10 times alone in the month of January, making it a very, very crucial region. So the region is not it's not a new region, but it's actually taking reference from price action, previous price action in the past, was in January this year. So I see this region to be the low of January 4th, which was around 28,000, roughly 28,000, to the close of that day, roughly at around 32K. So that is how I've seen, that is what I've used to group this region. And then the upside of this consolidation, which is the 42K region, is for me a 40.5K, which is the close of the January 8th, which we had, where we had the 42K high, to the close of the 28th February, where we had a retest of that level. So that's around 40.5K to around 45K. So far, so good. These two regions are still intact. We've just had tests, multiple tests around that level, but till we get a close above this region, 42K region, or a close below the 30K region. So far, what we have is or are multiple tests, but no close yet. Until these regions, there's a close below this region for the 30K before we can start having a conversation as to a maybe continuation of a downtrend, or a proper down for it continuation of a downtrend for Bitcoin and a proper downtrend for the entire market, in my opinion. And then the reverse should be the case for the upside as well. So the bulls for now are still safe, and then you can see that despite all the enormous pressure being mounted by the bears on the bulls this week, we've had a whole lot of huge sell-offs. Couple of On Friday there was a huge sell-off. Um, on 21st, which was on Monday, there was a huge sell-off as well that threatened the 30K region, and then it further pushed down to 28.8K. But you can see that the region has been holding on so strong, and then there's been a bounce off, and the bears have tried to take it back down, but they still the bulls are really defending that level. They are not ready to let go. So you can see that it's still safe. It's still safe, at least for now. And it's easier to kick a man when he's down. So there's a whole lot of force around the region getting compromised and all that. But you can clearly see here that the region is still very, very intact, and it's being well defended by the bulls. Then there's another um, force about the death cross. To me, the death cross is all there. It's there, but to me, it's it's more or less it's more or less happened because prices. The more prices keep staying down in this consolidation, not going to the upside. You know, it's the tendency for this to happen is really really high. So death cross merely just fits the phase we currently are in the market. It's the tendency for it to happen is actually really there. you know. So we're down, so everything will seemingly be tilting towards the downside. So the longer we keep staying down, the more tendency for things like death cross to happen. Having that's why you see the 50 EMA coming down, and then it seems like trying to compete, because if actually if this death cross was actually a big deal per se, you'd have expected a very huge reaction, a very massive reaction from the market, and it's getting close to a week. From the chart here, I can see it happened about 4 days ago on June 23rd, and we're yet to see a very, the 30K region is yet to be compromised. It's still intact. So that means, and virtually every trader, at least every average trader in the world, is aware of this death cross. So if it were to be, or if it was to be a very big issue, then you would have seen a serious downtrend by now. You'd have actually seen a serious reaction in the market. But you can see things seem to be stable. The bulls seem to be in a good position defending their 42 and their 30K region. So, um, and also not to forget the fact that MEs, whether EMA or SMA, are both lagging indicators. The only leading indicator we have in price action is raw price action, as it is as, and that is what I'm actually giving to you right now. So the dead cross thing for me is not much of a big deal. If it was, at least would have clearly seen that massive reaction from the market to the downside. So that is it for me for this week. Whatever it is I'm giving to you is for educational purposes and not financial advice. Trading, that crypto stocks or forex, is a risky endeavor, and you should endeavor to carry out your own research before entering any trade. So that is it from me this week on this week's review. I hope you got value. I would, if you did get value, then please like and subscribe to this channel so as to get more updates and more educational content like this on this channel. Feel free to share, and as well drop me a comment in the comment section. I would love to hear your feedback. Thank you very much. I wish you a very happy Sunday. May the bulls be with you all, at least for now. So, bye bye.